Welcome back, guys. This is another episode of our free forex trading course 2025. And this is Pyth FX. Today, we're going to be talking about spread. But before I proceed, if you're yet to subscribe to the YouTube channel, kindly go ahead now, click on the subscribe button. You're going to see the subscribe button where you're watching from right now. Just click on the subscribe button. It's free. You don't need to pay. Just click on subscribe. And at the end of the video, please drop a like. If you have a question, drop it in the comment section. I'm going to answer it for you as well. So let's dive into what we want to learn today. So today we're going to be talking about spread. In our previous trading class, I talked about bid and asking price and bidding price. And I said you're going to know the importance of the bidding price and the asking price when we get to the spread. And here we are. We are the spread class. So what is spread? Spread is different between bid and ask. Spread is the difference between bid and ask. And don't forget, in our previous class, I said bidding price is the price at which you sell with, and asking price is the price at which you buy with. So the difference between these two prices is what we call spread. The difference between these two prices is what we call spread. For example, if Eagle USD is at 1.3500 and 1.3501. So automatically this one is our bidding price and this is our asking price. So the spread, the difference between this and this is what we call spread. So if you are able to figure out the difference between this and this, which is one pip, I've talked about pip and how to calculate pips in our previous classes as well. You can just go and check our previous classes. You're gonna see the pips where I talk about the pip. So you know how to calculate pip. So basically we use pip to differentiate between the bidding price and the asking price as well. So this is 1.3500 and this is 1.3501. So the difference between this and this is just one pip, and that is what we call spread. That is what we call spread. Simple as that. So why does spread matters when you are trading? Yeah, this is the main deal. Spread matters in trade execution. Yes, it's very, very important. If you have lesser spread, let me start from there. If you have lesser spread, it helps you when you are executing your trade because you can't compare someone that have wider spread to someone that have tighter spread. So if you have a tight spread, your execution is gonna be fast. You get the execution is gonna be fast compared to someone that have wider spread. When I say wider spread means okay, you want to enter at this particular price and your spread is kind of wide like this. Let's say for example, let me use this. Let me take this color as a blue and this one as red. So just know that the red is for sell, the blue is for buy. So this is the entry price that you want to enter. So your spread is kind of wide like this, eh? And you want to buy. You want to buy, which means you are expecting this particular price to come to this your entry before you start moving on. But then price is not coming down, price is not coming down, reach this particular level. So the buying price, which is the asking price, the price has not reached your entry and this particular order price has already crossed your entry. So this is actually a wider spread. So that means you are not going to get triggers in this particular trade. Don't get confused. When you actually get to trading and execution, you are going to understand this clearly. That's why you need advanced education, you need advanced knowledge. This is a beginner class. So that's why you need advanced knowledge. So yeah, what I mean by tighter spread is now that if someone have a tighter spread like this, let's say your spread is not wide, very, very tight. For hell, you already see that your price has already the price at which you want to buy for has already tap into your POI and it's now start moving in your in your favor. I don't have much to explain than that. So that's just basically what I mean by tighter spread. Spread is equal to the cost of entry, the amount you needed to enter a particular trade. That's what we call a spread, the cost of entry, more like a transaction cost. You get that's what your broker charges you with. So if your broker charges high, those are they are charging you too much of money because you want to execute a trade. If your broker is charging less, that means they are charging you less because you want to what they are charging you lesser cost of your entry. It gets for you to execute a trade. So that's why it's advisable for you to look for a broker that have tighter spread, they have low spread. Low spread, I mean low spread, like they charge you less for you to execute, and that's normal. That's normal for everybody. You want to execute, you want to get into a trade with lesser fee. You don't want to be entering a trade with higher fee. So that's why traders always look for tighter spread, broker that have a very, very good spread, tighter spread. So it is the instant cost you pay when you open a trade. Yeah, that's what it means. The moment you click on that buy or sell button on your Meta 5, you are already paying the spread, your broker the spread. So it now depends how much you are paying them. Is it higher? Is it lower? Depends on how tight the spread of your broker is. So the higher the spread, the higher the entry cost. I already said that. There's nothing more about that. So I think you've learned one or two things about spread now. You should know that if you are looking to sign up with a broker, you need to sign up with a broker that have low transaction cost, which is what we call spread. So like I said, I traded with my recommended broker, which is XNet. They have a very, very low spread when it comes to executing. They have low spread, good GBP, JPY, Euro USD. I've tried them. That's why I'm still taking with. I've been trading with XNet for over 2 or 3 years now, and I see them that they are very, very good. They are fast in execution. When it comes to spread, it's very, very tight. So if you want to sign up with XNet, you can just reach out to me, send me a DM, and I'll give you my affiliate link. So you're able to sign up. There are a lot of benefits if you use my affiliate link as well. And I'm gonna be getting some incentive as well. So yeah, this is gonna be the end of this episode. So if you're here to subscribe, please click on the subscription button, like this video because if you like it, YouTube is gonna recommend it to a lot of people as well. And as you are learning from it, them they're also learning from me. So you are gonna be getting your own reward as well. You understand? So see you in the next episode.